Shares of CarParts.com coming under a little bit of pressure here today, despite record third quarter results. Sales at the online auto parts retailer jumped 21% year over year as the company turns this supply chain crunch into an opportunity. Joining us now is Lev Peker, CEO of CarParts.com. Lev, welcome back to the show. Good to see you again, and congratulations on a strong third quarter. I want to dig into this supply chain because unlike a lot of other auto parts retailers, CarParts.com actually controls its own inventory. Tell us how that has helped you navigate through the supply chain disruptions.
Yeah, it's great talking to you again. So by owning our own supply chain, we can basically go from the factory direct to the consumer, and we're not relying on anybody. You know, we always like to say that inventory is our oxygen, and I'm really proud of the work that the team has done to help us build up inventory in the third quarter. We reported the largest inventory we've ever seen in our company history, and we have a fantastic team that basically controlled our destiny and allowed us to build up inventory to 132 million in a very difficult environment.
Continue to keep growing your inventory.
We're going to continue growing our inventory. One of our pillars of our strategy is getting closer and closer to the consumer. Now, we believe that we win by being able to deliver parts to customers in one day. So, we're going to continue opening more and more distribution centers. Right now, we're expanding our Texas facility. It used to be 210,000 square feet, and we're adding another 156,000 square feet there. We're also opening a Jacksonville facility that should be operational in Q2. And then we're going to continue getting closer and closer to the consumer, making sure that we get the parts to them in one day.
So your company is not immune to higher shipping costs. I mean, companies across all industries are having to deal with that right now. How have you been able to manage those higher shipping costs to get the product when you need it? And have you had to, or do you plan to, pass any of that along to the customer?
So our industry is unique in that, there is pricing power. Additionally, inflation right now, is hitting all companies pretty much equally. So some of that gets passed on to the consumer, but our model is unique in that we go from the factory directly to the consumer. And so we pass on a lot of those savings straight to the customer. So if you think about buying parts on carparts.com versus going to your local store or your local mechanic, you are saving 50 to 70%. And so those savings continue to stay with the customer, even if we pass on some of the cost increases that we're experiencing ourselves.
The demand for these used car parts is so strong. Do you see that continuing into the next year as well?
Absolutely. We have the oldest fleet we've ever had. The average age of the vehicle on the road is 12 years. There's 286 million vehicles on the road. And the fleet is aging even more because, there is a chip shortage. It's very difficult to buy a new car. So used car prices are going up as well. And consumers are hanging on to their vehicles longer, which means more maintenance, more repairs. So it bodes very well for our industry going forward.
Lev, I know that you can't be uber focused as the CEO on the stock price, but I am curious about how investors are reacting today because the stock is down now about 7%. Do you think they're getting tripped up when they look at the net loss of 4.7 million compared to net income of nearly 1.5 million the same time last year? Why do you think investors just aren't so pleased today?
Yeah, it could be the net loss. Again, as we've said on the call yesterday, the majority of the net loss is driven by non-cash items. And so we're really focused on building a long-term business. Now, this industry is huge. It's $300 billion. And, we're a tiny company that still has a ton of room to run. And we're making a lot of investments into the business to try and disrupt this industry. If you think about how auto parts have been bought for the last 50 or 60 years, they're being bought the same way today. We're one of the few industries left that has single-digit online penetration. And so it requires a lot of investment to try and disrupt this. So we're going to continue investing for the future. We're going to continue getting closer and closer to the consumer and focusing on solving their problem. And the stock price will do what it does, but eventually it'll catch up.
As you know, there's a big climate summit that's happening in Glasgow in Scotland right now, and a big push in the U.S., right, to move towards cleaner cars. How does that impact your business, long term?
Yeah, I think long term, we did launch an EVHub. It's carparts.com/EV. We have about 700,000 different applications that you can shop for in there. We're making investments today, but it is going to take a long time for the EVs to penetrate the car park. Again, 286 million vehicles on the road. They are getting older, so it's going to take some time for EVs to penetrate the car park. But the majority of the parts that we sell are agnostic to the drivetrain. So if you think about an electric vehicle, it still has bumper covers and hoods and mirrors and headlights and taillights and control arms. And almost all the parts are pretty much the same. Sure, it's missing a lot of the engine components, but outside of that, all the parts that we sell are really on an EV as well.
Lev, when you talk about wanting to get closer to the consumer, and it will be very important for you to have distribution centers across the country, what's the cost of that going to mean to carparts.com, and how is that playing into your outlook when you look at margins going forward?
Yeah, so from a cost perspective, we can open a distribution center and finance most of the equipment, and then our inventory turns 4 times faster than the industry. So usually we can stock a DC and turn the inventory before the bill is due. So from a cost perspective, there isn't really that much cost that gets baked into the margin. And so our margin is really not affected by the cost of operating a DC. It's really below the line. It's the labor and all the things that go into that. But that's a variable component of operating a DC.
All right, Lev Peker, CEO of carparts.com. Always a pleasure. We'll see you next time.